There we go.
All right. So give it a second or so while it tries to get everything up and running. We are back live. Yes. All right. All three things are on. Hello, everybody. Cashflow Chronicles back for another episode. Season 2, episode 38. Hope everyone is having a phenomenal start to the week. We got lots to talk about with respect to earnings. There's other things I want to ask Chris. I'm curious if he's done any diving on. So there's lots to talk about this evening. As always, subscribers to the channel can comment and talk in the chat for absolutely free, but always consider becoming a member of my or Chris's Patreon. Links for both of those are in the description. I appreciate everybody that has signed up to be a Patreon. My prices are going up, so I don't know about Chris, but anyway, February 5th, 2025, contemplate becoming a member. Apple 2000, sorry, not 2000, Jesus, 232, Amazon 237, Dutch Bros $65, believe it or not. Google, we'll talk about that today, tumbled 7%, 191.47. Palantir up over 20% since last time we talked about it, 101. SPY 605, Qs 527. Bitcoin down 7% since last time we chatted, 97. Oil back just above $70. And then Henry Hub gas, $2.30 some cents. Mr. Patel, how are you?
Dude, my bowel movements are getting more regular and it's awesome. I love it. Like,
are you
I'm
taking
sleeping...
like blood circulators or like
no, I've just been sleeping at a more regular time, like concentrating on different things. And just the thing is, like, the more you like do things like regularly, the more likely it is that your body is going to do things regularly.
Bowel Movement Chronicles. I'm all about it.
Bowel Movement Chronicles. I mean, how many times do you go to the bathroom? Like, do you have like a set time where you go, or it's just like, I feel like going to the bathroom
every morning, man? Yeah, every morning. And for a while I was doing morning and when I got home from work, but now it's just morning.
No morning, right?
Yeah.
I'm just saying, like, the thing is, like, that's one of the secrets to like longevity. Just creating a routine and then living by it, right? So right now I have somewhat of a regular routine. If the portfolio works out the way it works out, I'm going to quit my full-time job probably next year, and I'm just going to do this full-time. And just, because at that point the investing will take care of like my most of my expenses, and I really just want to get back to working 9 to 5 again. Like, I work overnight right now, which sucks. I don't have to work overtime anymore, but yeah, man, it's just, I look forward to the days where I can just wake up in the morning, look at the market, maybe like at 6 o'clock in the morning, go to the gym, do some real research, open the market up, get everything out of the way, 7, 8 o'clock, just wind down and sleep normally like a normal person again.
There you go. Yeah, I have my women in my family generally go into nursing, and so I know exactly what you're talking about. They either work the evening shift or the night shift, and it's tough. You get off of a normal rhythm, and there's a huge subset of people like yourself that work overnight. My brother did it for a while as well when he was working in organ donation. So you know how it goes when, like, unfortunately somebody is brain dead or unfortunately passes away, they have to report it in to see if there's any opportunity to donate organs, right? So that's what he was doing, and that's a 24/7 business, right? So life minutes are literally lives at that point. So shout out to everyone that works overnight. You guys are doing a thankless job, and of course all my nurses out there, if you're watching.
Oh, dude, shout out to the nurses especially, man. Dude, to do the night shift in the hospital, it sucks. Like, the time just does not go. Like, if you like, I'm sure that there's people in here that are nurses. You guys know exactly what I'm talking about. It is horrible. And the thing is, you have to be alert. And the thing is, when you're off the shift, and because like everyone's got a real life. So like my wife will be like, hey, we've got to go here to this person's place, or we're gonna go visit somebody, and it's like during the day, and I'm just like, I'm like a zombie, because like that's not my time to be awake. And then once you get used to it, and then it's right back to night shift again, and it just sucks, dude. It really sucks. Yeah.
All right, let's run through some people. So we got Silly Bunt, we got Julie, we got Melanie, we got Junebug, we got Justin, Alan, Flapping Cheeks, Chris knows all about that. Ray, Big Billy, Johnny Mac. Hello, my friend. We got Chris. Thank you for the kind words, my amigo. Primordial Light. He's a follower of both of ours, so glad he's been able to check us out and hang out tonight. We got Paul. We got a lot of people. Let me see if I missed anybody. It starts getting. We got DL hanging out. Slowpoke. Cameron Vincent. We got Mac. Yeah, we got a lot of
here's
good
the
people in
question.
here.
When are you going to retire? And then we just do this full time, like 5 days a week. We just analyze the markets. Maybe we'll do a closing segment like Amit.
I don't know, man. I really
we'll
like what I'm doing. I really like what I'm doing. If I get bored, ask me again in a year. But I was getting pretty bored of being like an engineer. But now, I think I work a little bit more of like a business facing role. So it's within UDoc, and I'm having a lot of fun with it. And once I'm working on a pretty big project right now to help with the company turn around some things. There'll be a markets update at the end of the month. But UDoc will have an update, and who knows, in a year's time, once I kind of get this process that I'm building up and running, maybe it'll be time to kind of call it. But I don't know, man. Somebody asked me that today. Palantir's doing well. They see that Rocket Lab's doing well. They see a lot of the other companies that I'm investing in doing really well. And they're like surprised. And I guess I think I sent you this. I put in an offer at another house, and we're closing on that on March 10th. So that'll be fun. That'll be the fourth house. So that'll be nice. And the house that I'm sitting in will be eventually rented out as well. And I'll buy another house. I'll probably call it at that for the short term, right? Like 5 houses, 4 of which are rented out. But after that, like I'm kind of just sitting here like, what is the right time? But I'm having fun, man. Like I'm one of those people that needs something to keep me occupied. So being able to go into something, and go into the office and stuff, like I need something to keep me occupied. So I would either need to have enough money where I can have a failing business that I would still be able to go and do, like a cigar shop that moonlights as like a wealth advisory at the same time. Like it's like, oh, people, you talk about stocks, they're like, I need an advisor. I'm like, oh, well, step into my office, and there's like a magic door that opens, but I'm still hemorrhaging cash, like $1,500 a month, because I just keep smoking all the cigars that I'm supposed to be selling. Like, I don't know. Until I have something that has the opportunity to do that, I just don't really see it. But it is nice to be able to watch the markets open and close. I do that with Amit while I do my work. But it would be nice to be able to do that, at the office, and potentially have some sort of gig that I have open. And but at the same time, man, I don't know. It's tough. I can't imagine myself not having something to do during the day. And I'm only 33, so it's tough. It'd be like, what am I going to do? Bug everybody else during the day while they have kids? So I don't know.
Yeah.
I really don't know. But I would like to travel a little bit more. I would, like you stated, get a little bit healthier. I'm definitely not in the best of shape. That's for damn sure. People note it all the time on X and YouTube, always wishing better health for me, which I appreciate. But yeah, that would be something that I want to concentrate on. And I don't know. If we have a couple good years, really, my goal was really to get to 8 figures, and really just need a couple good years in the market, So I don't know. It might happen. I might pull wait another year, or let me get to 20 mil, or let me get to 30, or but
it always starts at a number, and then it just keeps going higher and higher. And my wife noticed that. She's like, you said this number, and then now you're saying this number. And I'm like, babe, I'm just saying inflation's going up at the same time. Dude, I really, it's funny. I love my job also, but I just hate the hours. And the thing is, like, if I wanted to do like day shift my job, I probably couldn't do it, because everything requires in-office work now, right? Like, they really made an exception for me because I work the graveyard shift overnight. And so I work, I work in New York. So it's like a big difference. I've actually, and I haven't spoken to my wife about this, but maybe in the future, she's actually asked me a couple of times if we wanted to maybe move to New York City again. And I'm like, nah, probably not. I would rather be in Georgia. And the thing is, like, right now with our, like, we don't have kids, and I'm not sure if that's even a possibility for us, like, long term. If we don't have one, we don't have one. And maybe it's a good idea to just live like a nice, in a nice apartment in city, and basically just use that as like a hub to just travel everywhere, and just work. I mean, and my wife she's really smart, so she could get a job anywhere. Like that's the beauty of her field too. She's in she's in the pharmacy industry, so she'll find a job.
Yeah, man, it's and we had our little Monday chat that got cut abrupt this time, but but that was always fun. But that it gets me thinking. It's like, I have my connections with you, and we've chatted about. Whoa, that's some like YouTube thing that just started in the background. Hold on, let me get that off.
Yeah,
there we go. So I mean, I have that conversation with you about, do we end up starting some sort of fund? What do we do? And then I also have the conversation with Steve, and it's like, do we just start a Seeking Alpha community? Those are pretty lucrative as well, and that could supplement a really good, decent income that could, support both of us if you get enough people in there. It's kind of like a Patreon, but like I guess through Seeking Alpha, which would be pretty interesting. And I don't know, like I feel like that there's an opportunity as well to provide more full-time service to the YouTube community as well as like Patreon. I feel like I get I don't know, like I have a very small Patreon and YouTube community of like 40 or so people that are like, actually there's like a little bit more that I've gotten through free memberships and stuff like that. But at this point I've gotten like 40 or so that are like consistently like paying, and I'm very appreciative of that. But like the benefit of like having those conversations and like really diving deep into those relationships, as you probably have experienced as well, like really makes me feel very comfortable, because you're literally like helping shape people's lives in respect of like how they can shave literally years off of their learning curve. Like, because it's very difficult to have that one-on-one relationship when you have, let's say 100 or so people in the chat right now, and you can't really like communicate or like tailor your conversation piece to exactly what they need from you. So it's, when you have that one-on-one or a smaller knit group, it makes it a little bit easier. The chat gets slowed down. You're not like in front of 30 other people where you can't, or I guess in this case, 144 or 150 other people where you can't like specifically focus on them for 10, 15 minutes.
What's good is I really like our new meetings that we started with Steve and myself. Those are fun because it's not something that we open to everyone. It's just keeping like us people closer together, where we can actually sit down and talk about certain things. We can pass ideas off to each other. And what's good is that between myself, Steven, you, and Ken and Amit, we have enough investing experience to kind of like say, what, this looks like it's a good thing. This one looks like it's a challenging place to be. And that investing through consensus, it feels good, because I think a lot of times, we have this tendency that we may overlook something. And if one of the other guys catches it, we can say, hey, look, this is something that you should also remember. And it's kind of like the same way all around. So I think when you're investing like that, it's good. And it's nice to just have that friendly bond too,
For sure.
So yeah.
Speaking of, we all of us in our own little fashion chimed in about what we heard on Monday, which was the Palantir earnings call. I wrote a sell article on Seeking Alpha that got absolutely roasted. I don't know if you read through any of the comments or not.
I read it that morning.
Oh, you did? You sent me a screenshot of some of them. That's right,
bro. So I think you called it. It's like Palantir investors are running on hopium. So someone wrote in your section, is like, Matt runs on dopium. I was like, damn, bro, damn.
Damn, dude, I called out the community, and the community showed up. This
is like Tesla community times 2, man. Some people want to hear my thoughts, and I'm like, nah, man. Like I'm done. I don't want to.
That's what I was gonna ask. I was gonna ask if you're gonna ride with me into the grave, to the hell, but you're just gonna keep yourself.
What's funny is that you're actually still a Palantir investor. You just don't like the valuation, but man,
dude, the amount of people that are like, you're still holding your stock. How can you want to sell it? Like, I'm like, Did you not read the article? I'll literally read out aloud like the last part of the, which I think is hysterical.
Show the screenshot it.
It's like, right up front.
Share the screen. Yeah.
Here we go. Let me put this over here really quick and share screen. So obviously I got this wrong, right? You can see like this huge dildo right after my red, like after my red, and it's up 21%. But literally, like, you know, I go through it. Literally, this is the third paragraph. I have no doubt that the company will continue to release products on an annual or biannual basis as they continue to cater to the modern enterprise and learn how to best solve industry and government problems. In fact, I have no doubt that Palantir will be worth between $500 billion and $1 trillion one day. But encroaching on a $200 billion market cap with $2.8 billion in sales is troubling, even more so when you have a significant amount of the company income is derived from interest on cash. Therefore, I've initiated a sell on the stock with a $60 price target over the coming 12 months. And the paragraph before that, while I remain extremely bullish on the underlying company, its mission, values, and their product, I use Foundry at my day job. The stock price has far outrun the financial metrics of the company. Now, I don't expect the company to trade a 15x price to earnings multiple, but I can tell you after a 10th quarter of GAAP net profitability, I would not expect the stock to trade at over 300x. But still, I think that what a lot of people read is they didn't like that I was saying that they're riding on hopium. I think that that's all it was. So you're not gonna trigger anybody. You're not gonna try to. You're staying clear.
No, it's just the points that you brought up are actually very valid. Now, here's the thing. When it comes to investing in certain companies, you have to remember a couple of things. Just because you like the company doesn't mean that you should be willing to pay any price for it, right? I know that goes against what Peter Lynch says. Peter Lynch says, hey, if you experience this product, just buy it, hold it forever, and don't look back. I think that's true for a lot of things, but for me, I realize that when it comes to something like Palantir, I have no real world experience on it, right? Like I don't use it, so I can't tell you what the value of this thing is going to be. The other thing is, it's one of those times where the valuation is so far extended out. I'm not even talking about a little bit extended. This is so far extended out that if you think about it and you buy it today, you're not even going to see any real return on that capital until something like 2029. And all the price targets, all the analysts that are modeling right now, like, oh, Palantir should be worth X. That means that what they're saying is, if you look at the Bank of America thing, they're looking at basically 2035 and saying this company should be worth X in 2035. So it should be $120 today, which is what they're saying. Now, the reason why they're saying that is because they're using a discount model and they're just saying, okay, so if you're willing to accept between 7 and 15% compounded for the next 10 years, then if you buy Palantir today, then you'll make money. My thing is, well, if you do it today, there's no guarantee that you'll get there all the way to 2035. Now, here's the thing. If you look at their metrics that they're using, they've all went from, oh, this is worth 35 to 60 to 90 to now to 120, all within less than 12 months. Yeah. And the thing is, the underlying business hasn't gone like parabolic. You're still growing at you're growing at a decent pace, which I totally think that's amazing. But dude, you look at the earnings for December of 2034, okay? You're looking at $5. Now, let's say you are a traditional software company. Traditional software companies, they trade at about between 20 and 25 PE multiple. Let's just say that. That's reasonable. Okay? Right? So let's go at the higher end. So that means that at $5 times 25, that's $125. Okay? $125 is what you're basically. You're already there.
And I made this point on, some people were saying, like, I can't believe this. You're talking out of both sides of your mouth. It's like, I haven't wavered over the 3 times that I talked about Palantir, between my article, the Monday stream with the when we actually talked through earnings, and the Friday stream for Palantir Weekly when I gave my predictions. I've held strong, right? I think the Palantir is a great company. It's going to do great things, and I believe in its values, and I believe in what they're doing for America. But in the short term, it's just I don't understand it. I played devil's advocate when I brought up the fact that Palantir at the time before earnings was $80 a share over of just under $200 billion market cap, but it was hanging out with companies like Wells Fargo, Amex, and a few others, right? And it really, after earnings, grew to a point where it's like Cisco, Salesforce, you know what I mean? Like it went to like top 30 companies out of the S&P 500. And, if you think about it, it's like, yes, I see eventually Palantir will be among those companies that have helped shape the American economy, the Coca-Colas of the world, the Wells Fargos of the world, the John Deere's of the world, those sorts of companies that are going to be true American staples, since I was born and raised and probably until I'm dead. I guarantee Palantir is going to be amongst those companies. But to be only trading where it is today, after having $3 billion worth of revenue, is just mind-boggling. And that's where I wrote and why I wrote the $60 price target. So if people don't like it, I get it. I hear you. I like the stock, and I anticipate and I continue to use the product on a daily basis. I think it's going to do great things. We started using AIP. I haven't necessarily seen the full capabilities of it, but I've seen a lot of demos. I'm excited about what it can do for our company. Our company's extended its partnership. UDOC has done, a good amount of partnerships and work with them in the past. So curious to see where that ends up going. But to me, I can't look myself in the mirror and be like, yeah, I should be buying more here. So I don't care. People think that I'm stupid. That's fine. I've made stupider mistakes, but at the end of the day, it's pretty funny. It's like, who cares if I got it wrong? I'm still doing well in the market, and it doesn't necessarily matter.
Let's answer two of the questions that are here, because I think those are kind of important. The first one is, let's just start from the bottom of up. Style says, serious question. If Palantir is a great company and they are growing, why would you guys sell? So just put that on the screen real quick. So there's a couple of reasons. When it comes to valuation, especially when things are so far extended, you're basically, and Jeremy says this too, if you look at Jeremy from Financial Education, if you pay for something so far out into the future and you're paying it today, you're more than likely to underperform for the next 5 years while the valuation eventually catches up to your thing. So here's an example. Can you bring up Tesla, like the chart for Tesla, and go back 10 years? Because I think that's a perfect example of a great company, great business, but the valuation got way extended. And now the investors that bought at the top are now basically sitting on dead money, and they've been sitting on dead money for the last 5 years, right? So imagine right now, 5 years ago, you put $100,000 into Tesla and you bought it close to the top. Now what you're going to do is that money is just going to sit there. So look at Tesla and that run up. Everyone knew profitability was achieved by Tesla in 2021. So that huge run up went to almost to $400. And basically, let's say you bought in between $300 and $400. Now, the thing is, if you bought at those prices, it doesn't mean that Tesla's not a bad company. No, it's just a valuation got extended. What ended up happening now is that for the next 5 years, you had zero return. Okay. While the entire market has almost gone up 40, 50, 60%, so that's the key. So if you buy something at a really, really expensive price, even if it's a great company, eventually the valuation is it's going to take time for that valuation to catch up, and that's the risk that everyone runs. Now, can Tesla go up to $800 tomorrow? Yeah. I mean, if there's some dramatic changes that happen, we could have been wrong. But the thing is, if you pay a very, very expensive amount, you're going to have a really bad time for the next few years. So I'm not saying Palantir is going to go down to 20. Hell, it could stay at $100.
It could.
And stay
go to 200.
It could go to 200. That's just
I'm not being an asshole saying that. I'm literally being like, who knows at what point the irrational exuberance goes to, right? And maybe maybe you're right. Maybe it goes to 200, Chris, within the next year or two, and it just flatlines.
Yeah.
Hangs out in a 20% band and moves between 240 and 180 and, kind of hangs out there. You don't know.
It all comes down to basically risk, right? The higher the valuation, the more risk you're taking on. That's all it is. So imagine right now, and this is the best example that I can give you. If I came to you with a pencil, right? And I said to you, hey, here's a pencil, it's worth $1. How much would you be willing to pay for that pencil? You say $1. Okay, here you go. One done. But if I said to you, hey, I have this pencil, I'm going to sell it to you for $5, you're not exactly going to buy a $5 pencil. It's like too expensive, you know? So now here's the thing. If you wait 10 years, that pencil could be worth $5 now. Why? Because inflation and natural growth and all this other stuff, all this stuff that can happen. So you're not going to say, well, man, I made a mistake by not buying that pencil 5 years ago. But if you had bought it 5 years ago for, let's say, $5, now all you did is in the future, you broke even, you know? So this is where you really have to just understand, like, I have no attachment to like hating a company. Okay. Like, I don't think companies are like, I love Alex Karp. I love the mission. I just don't like the price of the stock. Right. And I didn't like, I know some people will say, well, you didn't like it at 30. You didn't like it at 40. You didn't like it at 60. And I'll tell you, yeah, that's absolutely true. Like the earnings that I've seen so far haven't justified a price that's above 30 for me. Okay. Now I am a lot more conservative. I'm a little bit older. I've been in the market for longer. I've been burned on buying companies that are overvalued and basically writing the thing down or sitting in my portfolio without any return for a long time. Like I've been there, you know, like if you guys want to know, like I lost a lot of money in BlackBerry in the 2010s, right? Because I overpaid, but that's a lesson that I learned, you know? So these are the things that like as investors, you'll develop your own level of risk tolerance.
Mm-hmm.
And that's not to say you're wrong or you're right or whatever. I can tell you if you look at my portfolio, even with like, let's say I held on to Palantir, I would still be exactly where I am today with those Palantir because I made money in other places, right? But the main difference is, in my opinion, I took a lot less risk to get there, right? That's, I think, the key to remember. Like you want to make sure when you're buying things, you're buying them at a good price. So you're decreasing the amount of risk that you have in your portfolio. The last thing you want to do is ride on a directional move based on something that's based on like an intangible, you know, or just the gut feeling of people. You know, you want to actually have some numbers behind it that are saying to you like, hey, listen, this is worth this. Like, think of these companies as businesses, not as cults, not as communities and all this other stuff. Like, I get it. I like that concept that people can crowdsource information together. The community aspect is great, but don't fall into the trap of saying, I'm going to buy just because I'm part of a community. You know,
Love that.
You have to remember you're buying a business. So if you're buying a business, you should be willing to, you know, move around. And like I said, also just risk management. So that's one. Let's see.
Yeah, I mean, for you, you're somebody that loves Google, and I'm curious, you know, talking about it. I was very flabbergasted by the fact that the stock dropped 7% today. I read the earnings report yesterday. I thought it was very impressive. I forget what it was, 15% year-over-year revenue growth, continued buybacks for the stock. The operating margin expanded from 27% to 32%. Net income for the cloud business grew over 140%. The revenue for the cloud business grew 30% year over year, staying, you know, I think that they were, you know, last quarter, the quarter before 25%. Now they're back up to 30%. So they're re-accelerating growth on the top line for the cloud business, and net income grew 140%. And I don't think it's done. I think the net income margin for the cloud business is going to continue to grow to over 17% or more. I mean, those businesses generally get into the 40-50% in net income once they're mature. So I would love to continue to see more. I don't think that it's nearly done. And I would love to continue to see the ops margin for Google continue to climb. But that being said, the revenue is a very small subset of what Google is. So they're not just, you know, that's not the only reason why the ops margin grew. That has to be from the search business. That has to be from YouTube, where the majority of the revenue from the company comes. So it really just goes to show how powerful that company is and continues to be. Curious what your thoughts are. Are you sharing publicly what you're trading? Because I know you have an interest in the stock.
Yeah, no. I think Google is a very undervalued position. One of the reasons why the valuation has basically been subdued compared to some of the other Mag 7 companies is primarily because of the whole like notion that Google search is getting disrupted, and the numbers don't necessarily, reflect that. At the same time, you also have this whole DOJ thing, which once that gets resolved, it should price higher. This earnings, one of the things that threw a lot of people off is just the amount of capex that these guys announced. They're talking about $75 billion in capex, which is crazy. But it also means that there's justification for it. These guys, they said it on their conference call. They are so inundated with demand that they have to invest in the capex just to keep up. And the thing is, if you look at the expansion of margin on their cloud business, that is significant. That means that people are willing to pay a higher price for the cloud compute in the AI segment. So it just means that, look, we're getting to the point where Google is still making money on YouTube, on the ads revenue, still on search, and they've got great margins on those products. So that's one thing. But their cloud business is growing really, really fast. One of the only reasons why they grew 30% compared to 35%, which what the analysts were expecting, is because they ran out of infrastructure. They ran out of compute. Like, they're just like, we had so much freaking demand and we didn't have enough supply. So one of the things that we're likely to see over the next couple of years is just a lot of CapEx spending. And look, every one of the Mag 7 is saying this. So it's not like this is a unique phenomenon to Google, but Google has been taking market share compared to the other two guys. That's one thing to consider also. So the overall growth in cloud versus what Google is going at, Google is actually almost double. The growth rate is double compared to the other guys, and its operating income is catching up fast. So that cloud business is going to do really well. And yes, it's going to require a lot of CapEx, especially right now when the demand is hot. So that $75 billion that they're putting up, they're going to get paid back tenfold. That's how they're expecting it. They're saying, look, if we put up 75 billion today, that means we're going to make 750 billion over the next 5-6 years on this.
Yeah.
So
this is
that's from 22. That's from 22.
Yeah, this is a few quarters old, but it's still growing massively. I wish I had a more updated one. You had the most up-to-date one. I don't know where it is, but I thought I got confused with the Q4 and the 2, and I'm an idiot. So
I gotta tell you a funny story. So I was on Amit's morning stream, right? And it was like a 4-hour stream. So one of the funniest things I saw on Twitter was, what's your bull case with Google versus ChatGPT? And I said, well, you can't really search for big booty Latinas on ChatGPT. You can only search for that on Google search, right? So it's like, we were laughing about it. And I was like, my wife's not going to watch this. It's a 4-hour stream. Well, turns out this dickwad has like timestamps everywhere. And so he's like, Chris joins. And my wife, I didn't realize this. She has a tendency to go to Amit streams and just go to the Chris joins segment and watches my segment. So I got caught. I had to have a nice little conversation afterwards. So
did you have to sit on the couch? What happened?
No, I just got to clear my search history a lot more now,
Oh God, dude, you're a goddamn animal. When you get on your rants, dude, I love them. It gets me fired up. I love that shit. Oh man. I'm curious. Did you listen to MicroStrategy today?
I did not. I didn't get a chance. I was actually sleeping.
Curious, because I know that you like preferreds. Do you know what I'm talking about when I talk about STRK?
Yeah, I know. I know their MicroStrategy is launching preferred equity. Like, I have to do a little bit more research on it. Like, I don't even know what the yield on the thing is. Like, what's 8%. The yield on them?
It's supposed to be
8%.
Yes, to start.
Huh? And they're convertible.
They're going to be convertibles perpetual.
That's crazy.
You can either take cash or payment and dividends.
Oh, my wife! Look at that. She's in the chat.
Stock.
Beep beep. Beep beep is in there. Well, now I'm definitely in trouble. There you go. So it's okay.
Next time I see Chris, he's going to be coming in with crutches, and his ankle's going to be flat. I just want to give a shout out to the chat. 250 people, Mr. Patel, that are watching us on YouTube. That's, I think, a peak for us, other than maybe one of the earnings calls. But appreciate 250 of you guys really being in here, and however many people that are listening on X. Just gives you a random number. 419 of people have clicked it. One person on Twitch, so 253 people. Man, I appreciate you listening to Miri and Mr. Patel just kick it after an interesting earnings week.
Yeah. You want to bring up the portfolio, see how we're doing in that?
Yes, actually, I was very surprised because, like, you'll see, we're down compared to where we were at the end of. I guess we're not down. Middle of January, we were doing really well, and we are down from there. And so, to be frank, I was expecting. Let me just double check. I'm not sharing anything proprietary on there. I don't think so. No. So we're down. So we got up to 6,500, 6,600 at one point. I think you probably remember. Yeah. And so I was like, oh, man. I was like kind of disheartened. But you'll see when we get to the next slide that we're still doing okay comparatively to the market. As always, everybody.
I think Venture Global probably like knocked us a little bit. You know, we got in a little bit too soon on it, but it's fine. I think long term it's going to be a winner for us. So it's not. I'm not particularly worried about that. But go on.
It looks like it's plateauing here at like the 18 to 20 mark. So I'm continuously adding. It's going to be fun to watch. And I had a couple people like frustrated with me because I told them buy at 24. And I had one guy say, I'm blowing the whole thing at 24. I said, don't do that. I said, take about 10 to 20% of what you want to initially buy and do that. And I was like, and then we'll figure out if, because it's like, I want you to make sure, because who knows, this thing could have gone to $30. It really could have, depending on what environment we were. And honestly, there could be a day where it still spikes up. You know, you get a hedge fund or something that wants to buy into it, you know, especially after some of the numbers come out for the plaque mines, which just initiated production in December. They might give out some really good information to say we're going to be loading X amount of LNG trains X amount of LNG ships per quarter out of plaque mines, etc. And next thing you know, people are doing some math and like, holy shit, that's a lot of revenue pile in, right?
And also with the Trump administration, you can see that they're really hell bent on exporting a lot of energy. And the thing is, like, if you look at the Lee Zeldin, who's in charge of the EPA, and I think I forgot who the other person was. Basically, that's one of the main pushes that they have, that they're going to get environmental approvals for a lot of these things. So, I mean, we discussed this privately, but Venture Global has a total of five projects that need to get, you know, put online. Right now, they have 2 projects that are concurrently running, with one that's not. Venture Globals are going to be a little bit complicated to explain compared to like a traditional LNG exporter. But that's something that we'll discuss in another episode, because they're literally like with Venture Global, you need like about a 2 to 3 hour explanation from.
Not about 2 to 3 hours, but yeah, you definitely need it's. And people are like, what do we do? Do we buy NEXT? Do we buy Virgin or Venture Global? And I'm like, you know, it really depends on your risk tolerance, right? It always goes back to, you know, one's already producing and has revenues. The other one isn't. So you kind of have to, you know, push and balance and think about the terminal possibility of what each of them is going to do. So I did write into a Seeking Alpha article about it. This one is not being dragged through the mud. So if anyone wants to read it, feel free.
One of the interesting things is, you know, a lot of people are worried about, if the Chinese end up putting tariffs on LNG, like, what does that mean for LNG demand? And I'm just like, nah, Europe, they reroute the ships to Europe. That's pretty much what they've been doing. Anytime that they've bought these, basically they've bought these loads way in advance, and the pricing in Europe is a lot higher. So they're saying, instead of dropping off the LNG here in China, just drop it off in Europe. And they're making a killing. The traders that own those cargoes, they're making a boatload of money. So it's not something that that's even impacts these guys. And that's the best part about LNG, in my opinion, which is that you're buying infrastructure. You're buying a toll bridge. You're not buying the underlying commodity that you have to deal with the ups and downs of the liquefied natural gas prices. Now, the one thing that's different between something like Cheniere and Venture Global is that Cheniere has pretty much all of their cargoes already, sold, accounted for. Venture Global's aim is to keep a lot more of that spot priced cargoes on their own. And so what happens is, when natural gas prices go higher, they make a ton of money. But when gas prices go down, you also run the risk of not making as much money. So you might see in terms of total revenue for Venture Global have more of a spike and more of a dip than you do with Cheniere. But the benefit with Venture Global is something we'll discuss at another time, because I'm telling you, we need about 2 hours to discuss this whole thing.
It's interesting. Yeah, it's definitely interesting. Which is why we were kind of sitting there like, because originally, I'll just say this and then we'll move on. Originally, Chris and I were very turned off by the IPO. So Chris and I chatted about it about a month and a half ago when he finally told me, and I was like, holy shit, I got fired up because I didn't know Venture Global was going public, and I know what they're doing, and they're doing a phenomenal job. So they have some stuff with UDOC. So I was, kind of curious and knew about it ahead of time. And all publicly, of course, nothing private. But then initially they came out with $110 billion market cap valuation for what they were going to sell at. And I'm like, Chris and I started to do some math, and we're like, that's not a lot of meat on the bone, right? It's like buying Palantir, expecting it to eventually get to like a $350 billion market cap. It's like, well, okay, so I'm buying here, and at what point is it actually going to grow into that $110 billion market cap valuation? It doesn't make any sense. So, and then when they came out and they said, no, we're actually going to start it at 60, I was like, I mean, still a little high, but, getting my interest, right? I mean, it can grow past 60, and especially if they buy back stock, and it's not an MLP, right? It's an S Corp. So you actually have the opportunity to buy back stock and, do a little bit more leeway with the actual cash flows rather than just automatically flow through to the investor. So it was very interesting in my my thought process. And I was like, okay, well, at least dabble a little bit. So I'm going to be adding every other week to it, small position here and there.
Same here. I'm going to do the same thing. The
other thing is go ahead.
No, after a few earnings, I think we'll get a much better and clearer picture of. And the thing is, like, one of the things about venture, damn it, man, I really don't want to talk about this thing because it's really going to take us a long time. So with Venture Global, I was going to talk about the timeline, because when I get excited about something, I get like super antsy. So like Venture Global compared to like the other LNG terminals has a completely new way of doing things. So there's a lot more alpha. And I think sometimes what I've been seeing is people utilizing the valuation of Cheniere to value Venture Global. And I'm like, no, there's a little bit more to it than that, because these guys have a much different business model than the other guys do. So that's where the alpha is, that other people are just saying, well, let me take a look at its cousin and see what this one is doing. And I'm like, no, their cousin and this one, they have two different business models.
Yeah, they're not direct analogs. I mean, you can look and be like, all I'll say about this is you can look at Cheniere and be like, okay, they have 50 in place, MTPA, and they're going to try to get to 75. Their market cap is X. So they're probably going to get, 850 million per MTPA. And so you multiply that by 75, that's how you get the $70 billion market cap that it is. And then you say, okay, well, if you use the same for Venture Global, they're going to get 140 MTPA eventually, in the next 5 to 10 years. Then you multiply that by the 0.85 or billion per MTPA. It'll be worth, let's say, $130 billion, and it's only worth 60. So there you go. But like you stated, it's not apples to apples, because what they're selling and how they're selling, what they're selling is the same, but how they're selling it is very different. So like you stated, depending on what kind of market we're going in, are we entering into an LNG starved world? Or are we entering into an LNG fluid world, kind of like the oil markets right now? Is there a lot of LNG glut into 2030? Who knows? Any other things in the portfolio you want to chat about? We did have
someone's like, why are you still holding Celsius?
That's my dumbass mistake. It'll come around, man. It's gonna come around. Just you wait. It'll be interesting. It's more of a I don't know, a gamble for me. Yeah, almost like an SMCI, but less lucrative probably, because I just anticipate it's going to be eventually turn around. But you know me, falling knives. Sometimes you have hope, and maybe it probably was better to just wait until after it actually does rebound, and Chris and I chatted about it, we both said, don't touch it now, don't touch it now, don't touch it now. Because obviously it got to its place where the trend reversed, right? The revenues reversed, competition's growing, etc. And then, you had this exacerbated third quarter report, which obviously turned out extremely awful, just knowing that basically Pepsi stopped buying product. And then in the fourth quarter, from the earnings call, they basically were saying, we're forecasting there's going to be pressures, but it's going to get back to normal. They're doing sell-through, meaning buying from Celsius as well as selling old inventory, stale inventory. So I was like, okay, that's bullish. So, I bought 400 shares, which to me, not that much money. To somebody else might be a little bit more, but I'm like sitting here like it's going to turn around, man. And, it will eventually, but it's been a dog.
Here's one thing that we all have to remember. Okay. Not every single thing you're going to pick is going to be a winner. Okay. Look at the other portfolio positions that we have. We've actually outperformed the general market because we get more things right than we get things wrong. If you look at our portfolio position on Celsius, it's barely 1%. So when it comes to it, your goal should always be to get if you do get things wrong, make sure your position size is wrong at a bottom level, not at the top. So I would say to anyone on here, like, no one comment, Matt is out here trying to make millionaires out of billionaires. Bro, if that's what you're seeing, I'm sorry to say that's wrong. That's a really wrong way to look at it, So
it's been good. Yeah, it's been fun. New is one that you and I think. Did you buy? Can I ask a question? I don't know if you're sharing it. Did you you bought Leaps as well? Yeah,
600.
Jesus, I only bought 50, and I thought I was like,
No,
but
man.
then again, my thought process was, well, let's see what happens with SMCI and add again. That was my thought. It's like, wait for SMCI, and depending on what happens with that, make a decision whether or not to double down on new. But
initially I had 400, and then what I did was in the recent run up that we just had, I ended up selling some
25.
So basically I had naked and I sold the 25s with the cash. I bought more the actual spread. So right now I'm sitting on quite a bit.
Yeah. I thought about it because like I said, I have 50 and I'm up a little bit already. So like that kind of helps a little bit. It's not a lot. It's like 10-15%. It's not like they're mooning or anything like that. And so I looked at it. I was like, this would allow me to buy, I don't know, 10 or 15 contracts or something.
I just need SMCI. I just need SMCI to retrace.
Can you wait? Yeah, I can't wait.
If SMCI retraces,
I feel like an absolute degenerate gambler. Like just waiting for it.
All four of us, we were like looking at SMCI. We were like, yo, wait a second.
Which I'm glad because the bit on this stream is just like, we're all sitting here like, I don't know, like it literally, like at least we can feel good about it, and we, like you said, I think Steven said he's like it's 50-50. I'm like it's 70-30, but even still,
I'm more like 80-20. So I went in pretty hard. You saw my position, so it's so messed up because you guys are making fun of me. You're like, oh, Chris is shook, and I'm like inside, I'm like,
no, we said you're unshook.
Shook.
You're unshook. You're unshook. After Steven told me how much you got, and I was like, wait, what? And he's like, yeah, don't ever call Chris shook again. We say it the whole time. We're like, Chris, man, when he goes in, and me and Steven, we have some cash, but we're more nibblers. It's gonna take us. You get a couple more right, like you have with the cruise lines, with Celsius back in 2024, etc. You're going to be in a place quicker than me and Steven are because we take our little nibbles. We're like, oh, let's put 5% of the portfolio at maximum. And you're like 25%. No problem. guys got some cojones.
There's a clip that I want to play real quick. Hopefully we don't get demonetized. Let me just play it. This is my we definitely should, Tevis. We definitely should go on vacation, man, and figure that we'll figure some time out. So
we're definitely gonna get demonetized.
Yeah.
This place gave me my first real look at how the world worked. I watched people running toward the betting window with high hopes, no plan. Then I watch them walk away from the track, ripping up their tickets in disgust. That wasn't going to be me.
You didn't bet?
No, I bet. But first I figured out where the sharp action was, where the guys who had a plan were. Guys who grinded, take the guesswork out of it. They knew which drivers had been rested. They knew which horses were ready. They also knew which ones were on last legs.
Mm-hmm.
How'd you meet those guys?
I didn't at first. But I figured out that they always bet late and they bet heavy. So I started watching that instead of that. The numbers told the story, they always do. Well, I started making bets of my own, the right ones. And once I understood what had happened, I watched the track to see how it happened.
Yep. And that's basically my investing philosophy when it comes to finding value plays that are out there. As an example, something like the cruise lines, right? I think a lot of people, when I discuss cruise lines to them, they were just like, are you freaking shit? Like, you must be stupid. Like, there's no way. They just got out of COVID. They have all this debt on the balance sheet. Bro, I took the cruise line idea to some real hedge fund folk, okay? And they basically said, are you kidding me? Like, no. Like, this is dumb. Like, you're not looking at this the right way. This is a broken business. We're not touching it. And I was like, y'all really should. And I gave them my due diligence, but they didn't listen. And hey, listen, it made me a cool, I'm not going to say how much, but it made me a chunk of change. And a lot of people that are on the Discord, y'all know exactly how much you made on it. So, it just goes to show that you don't need to be like some kind of super genius investor. You just need to figure out some numbers, get your thesis in line. And then once you have it, you just have to wait and be patient and let the numbers play themselves out.
Yeah, that's one thing I've definitely learned out as well is like, Warren Buffett says this too in a different way. It basically says like if you were to get 10 pitches at investing in stocks and you had to make sure that you only get 10 investment choices throughout, it's like you'll likely become a millionaire just because you're actually going to put so much thought before you take a swing. And I think what ends up happening is you hear Billy Bob at the water cooler talking about XYZ stock, and he has literally no idea about investing, but he's just excited to just gamble on something because he thinks that something big is going to happen. And ends up being a complete turd because, the company either ends up being a fraud or he doesn't fully understand it or he doesn't fully quantify the risks. And so next thing you know, you're investing in something that's complete garbage. And I've been trapped up in that too. It's not like I'm some sort of oracle that says, hey, I've never done it. I'm saying it because I've done it myself. And so, you have to take an opportunity to, and sometimes you call it tuition to the market, whatever. You have to learn and earn your stripes before you really start to get any good at it. But I think in reality, if you just are a little bit smarter, slow down a little bit, be more meticulous about what you're putting your money into, understand risks fully, then you'll get there. But there is a piece about experience and getting that as well. But that's something I've done a little bit better with is if you have full conviction in something, understand, what size are you willing to lose? Like Rocket Lab. I was willing to lose up to $100,000, and that turned out pretty well for anybody that's been following. And to me, I'm still holding that position. It's my largest individual stock position, and I'm gonna hopefully continue that one for another 2 to 3x, and we'll see. Who knows where I end up feeling comfortable? But for now, I'm comfortable with where it's at. I'm not riding on some sort of hopium or anything like that. If it was $60 today, I'd be selling it. It's. Yes, there's a little bit of overextension, but in my mind, just based off what I'm thinking, you can't build a rocket company for less than 10 to 15 billion. So you kind of have a moat there, kind of established. Yeah. So anyway, enough about that piece, but that's something I learned about Palantir as well. It's like I only put like 40 grand into it. And that's because 40 grand, 50 grand at the time was a lot of money for me. But as my portfolio grew, I didn't add more. And so I honestly made a mistake with Palantir because my cost base is only $13, and I should have been adding more over time, and I never did. I got to 4,000 shares. I said 4,000 is enough. It was enough at that point in time, but I didn't have the opportunity to relook, and I'd gotten some promotions and more money come through the portfolio. My portfolio elsewhere had done really well, Well, Palantir was kind of in the gutter, and I never reevaluated to say, you know what, I'm comfortable losing 60 grand or 70 grand or 80 grand. Otherwise, I'd have twice as much shares and probably would stop and doing the podcast at this point. No, I was kidding. But you know, you have to recognize through some of these things and anything. But I hear some people looking for the Discord link. If you guys are interested, Chris does have the Patreon.
I actually last night I closed the Patreon like to new members. Yeah. There's enough people there that that like I want to make sure the community is small and tight, and basically it's that they're getting real value. The one thing and this is something that I'll recommend to you too, don't go for total number of people. Because if you go for the total number of people, what ends up happening is you become like everyone else. You basically dilute yourself. You dilute like your community. I'd rather have a smaller group that's a little bit more focused, people that are understanding what I'm trying to put out there without having to keep repeating myself. That's the one thing we'll see too. Like, I mean, you're early in your thing. So I recommend if you guys want to join a Patreon, join Matt's Patreon. Because that's pretty much, I mean, me and him share so many ideas that our portfolios and our returns might have some overlap there. And then also at the same time, some of the strategies might differ a little bit. But overall, my mind and Matt's mind are fairly similar in how we think about certain things. So definitely recommend if anything, just join Matt's.
I appreciate that. Yeah, it's a lot of fun. I'm having a lot of fun with that. Initially, I wasn't really doing anything. And then enough people joined where I was like, I feel bad. I got to do something, So I started writing a little bit, making independent videos, and I opened up a WhatsApp group. So now I just have a lot of those guys in there. So it's fun to be able to learn and deepen relationships with people. Going back to the the public portfolio. Believe it or not, Chris, I was surprised we were still up 6% versus 3%. But last year we were up about 2.5x to 3x the S&P. This time we're only up about 1x on it, and then year to date we're still up 87% versus or last 12 months 87% versus 23% on the SPY. Matt Patel, that's right. I'm trying to think.
I'm trying to look at my performance this year, like what my performance is. Let's see.
I'm curious what mine is.
Let me just basically screenshot my brokerage. Nah, I gotta strip out too much information to basically.
Yeah, that's the problem. Like,
account
numbers and stuff get all up in there. Let me see where I'm at. Year to date, 11%. Last year, this is the main big account, 111. I can screenshot this and put it in there.
Yeah.
Actually, I'm kind of curious. Let me see what my Roth is. I'm not sharing, right? Okay. Last thing I want to see is like Matt's numbers are all over the internet.
I'll show you. I'll share mine.
I'll show my.
There you go. Here, this is one that I'll share. This is
There you go.
Basically, I have multiple accounts. So some of these I created more recently just to basically shift over. I also have a Robinhood that's separate. But basically, these are my returns since 2021, So not bad, right? So this 1 month is doing good. But if you look at like the 3-year mark, and that's like my largest portfolio, it's up 1,258%. So
not enough, Chris. Not enough.
Yeah.
Not enough. I'm pulling up. Let me get my Roth. My Roth surprised me over the last 12 months. But let me share. Here we go. Let me shrink that. There we go. And let me close this so I don't accidentally show them.
Whenever you're I guess I don't know, it just clear, like you can hear it. I don't know why you can
really clearly.
It. Yeah.
Oh man, I gotta get
your thing picks up your sensitivity on your mic is great. It picks up everything.
Yeah, I gotta get a mouse pad. Thanks for letting me know that. I was trying to think if like anybody, but nobody said anything until just now, and I've had it for like a month and a half. So But yeah, so the one on the left is my big account, my individual brokerage account. And so
Yeah.
that's the last 12 months, up about
Nice.
111%. And then the one on the right's my Roth, 184%. That's like pretty much all Rocket Lab. And then a little
Yeah.
bit was SLG. And then
Yeah.
when we were kind of that uncertainty, what was it, like 2 or 3 months ago, I sold SLG and put it into Rocket Lab.
Yeah.
So
that was good.
Well.
You sold at the top of SL Green.
A little bit. It retraced a little bit. So like it was at like it hit like 75 at one point, but it retraced back, and I think it sold to like the high 60s or low 70s. But my thought process was, and I think this is a lesson for people, right? Is, I think people think, oh, it's going to keep going. It's going to keep going. I was sitting there. I was just like, look, what do I think is more of a double here? Right. Looking at it, it's like I'm up 300 some percent on SLG. And my goal was kind of the 65, 75 range, and then reevaluate. And I was like, could it go to 90? I think it could. I'm not saying it's not, but I'm like, what's more likely right now to double? Do I think this thing's actually going to go to $120 to $130 a share? I don't think so. So the easy money's been made. Let me take that opportunity to put it into Rocket Lab. And I think it was, if I stop sharing my screen, I can tell you when and how much I put in. I just closed it out. But it wasn't a lot. Like, it wasn't like I doubled down my Rocket Lab position, but because I had already trimmed it over time. But let me see. Rocket Lab. There it is. It was probably October-ish. I'd put like 35 large into it, and that 35 is up. Or sorry, that's the current value. Okay, that makes more sense. It was like the last remaining 100 shares or something in my SLG. And so, or maybe it was 200 shares or whatever it was. But it turned 13 grand into 35.
Nice.
Just that little move, right? So not huge, but it's there. And that's all about continuous contribution. Sometimes you got to feed your winners. How did I Photoshop that quickly? Snippet tool. If you've never used it, I use it all the time at work. It's one of the best tools out there. Trying to think. We talked about Palantir, talked a little bit about Google. Microstrategy, haven't had an opportunity to digest. I'd be curious because I know you're into the preferreds, but it's an interesting one.
Let's look at it together. I haven't looked at it. There could also be like a risk neutral strategy, like an arbitrage strategy that could technically apply.
There's a lot of caveats, though. I'd like to look at it every time. Anything else? I know we were a little late, but we did go the hour. I'm trying to think if there's anything else that you want to chat about.
See, this is one of the challenging things that you'll discover when you actually grow the Patreon a little bit. Old members that have the inside loop on old plays, they did really well. And all it is now, it's just a waiting game. So I know a ton of people who have like Verizon spreads, they have like Truist spreads, they have Carnival, they've got Norwegian, they've got a lot of things that work really well in their favor. And the thing is, like right now, all it is just a waiting game, for basically the time to kind of run down. So the thing is, like, I don't have a lot of room for additional positions right now. Like, unless something becomes really, really attractive, I like my current portfolio. I'm just letting it do its thing. Like, this is the time where you want to chill. So someone comes and they're like, well, you're not as active. I'm like, well, the thing is, I don't really need to be active because all the positions that I had were done. Like, it's really hard, dude. It's one of the things that all the people in the chat, it's really hard to find those multi-baggers. I know that we've gotten a little bit lucky over the last couple of years, and that's really helped. But dude, like, you really need things to be on hardcore sale to be able to make a good return. And you need to have the inside loop on things. And right now, where the market is in terms of valuation, there's not a lot of great opportunities. Like, it's just like right now is actually the time where you want to be a little bit more risk off. Okay. Now, what does that mean by being risk off? That means don't overextend yourself. Get into things that are more fixed income. Why? Because the general market valuation might be a little bit extended, which means that there could be times where the entire market takes a dump, and then all the great companies that you have will take a dump also. Not because the businesses, there's anything wrong with them. It's just everyone is selling things off, you know? So this is where you have to just caution yourself. And it's really hard because I know when certain people, they join right now, they're like, Chris, what's the next play? And I'm like, the next play is go back 6 months, invent a time machine, go back 6 months, buy the play that we had, and now you'll be where you are. So sorry, it's just, what do you want me to do? I can't work backwards, you know?
Right.
And if something does come up that is worth putting some money towards, like Nubank had fallen off. Why? Because the Brazilian real had a spike in FX. So we got a quick opportunity to get into that thing. SMCI, this whole thing that's happening right now, the bet that we're making is SMCI is going to actually report their quarterly earnings and everything is going to resolve with the audit and everything. So that is the bet we're making. But I can't go backwards in time and, you know, do that. So a lot of times, and it really does take a lot of time to research these things. So, you know.
And a lot of trial and error and having good discussions with people, because Chris has a lot of good perspectives. He's got some experiences that I didn't. You know, he's been in the bond markets before, and he's won big and lost big within a matter of days. No, I'm just kidding. But all seriousness, but you had those experiences, and sometimes it takes a different diversity of thought to really think through all the risks of an investment. And sometimes you might just get super excited and get that confirmation bias. Steven and I are working on one run right now that I think we might have even talked to you about briefly on Monday before we called it early. We didn't get to have our full Monday session. But I know I talked about it at least with Steven, and I think it's pretty intriguing. It could be one that I actually take a decently sized big bet on. And it's in the robotic space. So it's interesting. I don't know. I never really fancied myself to be investing in some of these things, but when momentum's there and you have the opportunity, you got to kind of just get after it sometimes, especially if you see the opportunity. And who knows, I could see myself putting 30, 40 grand in it. So we will see with respect to that one. It'll be interesting, but we still need to have that full on conversation. And trying to think if there's anything else, but yeah, I'm with you. Like, the goal isn't necessarily to keep being risky, right? The goal, you know, I was having this conversation with my sister. Her goals are completely different than mine, right? Her goal is to get $150,000 a year. My goal is 8 figures because I know I can and I want to challenge myself, right? There's a difference. Like, if I wanted to get to the place where I wanted to retire and 150,000, now it's like, I hate my job, I hate my life, you know, I could find a way to make 150 grand a year or whatever I need to survive and retire today, right? I could figure out a way to make YouTube work as a full-time opportunity, you know, figure out ways to set up the Patreon or whatever to get to that point where I'm making however much I need a year to kind of survive. But it's not about that for me right now. I'm still trying to build. I'd like to get the more capital. I'd like to get to the 8-figure mark just so I can prove it to myself, right? I think that's something. It's like you stated earlier, Chris, you had a number in mind. And I think I told you this before. I hit that number for me this year. Like, I initially was just like, this is my number. And I was like, once that, well, I don't understand why I would ever work again. Well, I hit that number. And it's like, well, shit, you know, like, you realize a little bit about numbers. It's like, they're kind of just there. You know, it kind of becomes fake at some point, but it's so fake, but so real at the same time. It's very interesting. Your perspective of money changes once you know a little bit more about how to make it. And granted, I still have lots to learn, right? There's people out there that are legitimate billionaires, you know, people that have 8 figures, 9 figures that would probably would listen to that statement and be like, this guy doesn't know shit about money. They're right. But that's the thing. There's so many levels to how you can get things done and leverage, and you think about things differently once you start to understand a little bit more about how the economy works and stuff of the like.
I think some of the questions here are worth pursuing. Like, which one? Where does one start with DE? Believe it or not, it kind of depends on what kind of investing thesis you have on a company. Whether you think it's poised for growth or whether you think it's value, because that's usually the two things that you start with. The way that I typically do my due diligence when it comes to finding great companies and plays that are out there is I do the concentric circles model, where basically you start at the entire market and then you look at a sector, right? Like, do you want to be in tech? Do you want to be in energy? Do you want to be in financials, like banking, and then you kind of like get closer and closer to your end goal, right? So as an example, when the thing happened with SVB and all the regional banks, remember? And I was on Finance Junkies, and I remember we were talking about this. So the circle went from, okay, right now the banking sector is going through a lot of issues. So what you're seeing is everything is getting tossed out. The baby with the bath, the whole thing with the baby gets tossed out with the bathwater. That was exactly what was happening. So number one is you want to look at that sector, right? You want to look at the banking sector. And then you get a little bit closer. You're like, okay, I don't care about the mega caps because they're not impacted. So I don't care about JP Morgan, Wells Fargo, blah, blah, blah. I want to find out among the regional banks, who is the one that's still solvent, that has great balance sheet, that have flexibility. And then you find those companies and then you invest in those. So it's basically you go from outside and then you come in and then you figure out, okay, this is where you want to be. So I know that I kind of just like really ran through it very quickly, but that's typically one of the things that I use to figure out what to invest in. So that's something called mean reversion, where I see like an entire sector throwing away really great companies that I think eventually will get back to normal once the dust settles. And if the dust settles because half of them failed, that's perfect, because now there's less competitors, right? So the thing is, when it comes to the markets, when things get sold off, that's when you should, and I think Buffett says this, right? Like the stock market is the only market where when things go on sale, people are scared and they don't buy, and when things are overpriced, they're all jumping in to buy. So that is where I would say look for opportunity, man. But really just start at the top and then work your way through. Like right now with COVID, one of the things that I had in my brain was which businesses were impacted by COVID significantly. And then what are the chances that they recover? So I know the cruise lines were recovering. It was easy to see. I was on a cruise. I saw people spending money. I saw ton of business happening. So I said, okay, let me look at the balance sheet. So I said to myself, okay, Royal Caribbean, Carnival, this. And then I looked at different strategies on it. And I said, okay, what is actually going on behind the scenes for these businesses? And once you start like just working your way in, and you can find real value. And that's where I found it, where sometimes you have to do on the ground research and figure that out. Like Matt is in the energy space, so he has a little bit more insight into energy, but energy is also a great place to look for opportunities. Why? Because the nature of business in energy is they always have feasts and famines. Yep. So the only thing you have to do is figure out what to buy when there's a famine, ride it up, and when there's a feast, sell. And then the thing will come back down again. And you can make a ton of money in energy that way. So the people that typically lose in energy are long-term investors. I've never seen a long-term investor in energy make any real money, right? But energy is about trading. So,
numbers. When numbers are really good about energy, people are like, ooh, but they've never made more profit. It's like, and you probably want to stay the fuck away, right? Like, but Chris is way smarter than I am when it comes to that stuff, man. Like, I take a very different approach when I talk about DD, especially with new investors. For me, I assume that 90 to 95% of people that maybe not necessarily this podcast or people that are watching this, but 90 to 95% of people should really just be investing in index funds and not just like the random ETFs, right? ETFs and index funds, they can be similar, but most of the time they're very different. People assume that an ETF is just going to magically match the market. Don't ever assume that. Each ETF is likely to have its own sort of agenda. So always be cautious. And when I say index funds, I'm talking about NASDAQ. I'm talking about the NASDAQ 100 specifically, the S&P 500, sometimes the Dow Jones, Russell 2000s, etc. I mostly would focus on the SPY personally. But I would suggest most people start there. Then if you really do want to take a dive deeper, I would start at the end in mind. And yes, this can morph with time because I know it's very hard without fully getting an education and understanding some of the things about investing in the ins and outs. But I would start with an objective as to why you're investing, because it could just very be, I don't want to touch it. I just want to put money away every month into something that I know is going to secure money. And I don't ever want to look at it except maybe once a year to make sure things are on track or what I think they're supposed to be. And then in 30 years, I hope that there's enough where I could eventually pull out 4% a year and live happily. Then you have certain people that want to be more active, right? They, might not even want to be involved in the stock market. They think it's a hoax. They think it's paper. It's electronic. It doesn't make sense to them. So they might be even, want to go into something that's more physical, like real estate, or, buying and selling other goods that, hustling on Pokemon cards or something like that. Really, like, I'm not saying that that's like, but everybody has their own flavor. And I always kind of break down into 5 things, right? Objective, time horizon, risk tolerance, how much you want to add in terms of contributions on a monthly basis, and how active or passive you want to be. And really, it's just kind of like understand, because I think everybody starts off and they assume penny stocks are the way. And so they'll start going
did you see Amit pumping SMCI on his daily thing? Let me just show you. There you go. Look, Amit's already like on the SMCI train, so now he's gonna pump it. Like the first one, he could have put this at the bottom. It's like Super Micro has ramped up full production of Black Quilt Rex. This is the thing about Amit. Amit knows when he sees, like, he's like a, what is that thing? Like a truffle pig for opportunity. You ever notice that?
Yeah,
he, like, he sniffs it out. He's like, this is good. Like his Robin Hood thing, he just like sniffed it out. Like I got caught with, I should have bought a lot more Robin Hood. I was very bullish on it because I use Robin Hood all the time. But I was like, I'll get to it. And then he got into it deep, and I was like, good for him, man. But that was the correct move, bro. That was really the correct move for at the time. But he sniffed out that shit like a fucking truffle pig. I was like, this looks delicious. Mm-hmm. So now he's found his next thing. So that's why oh God, Amit's becoming more and more of a degenerate by the day.
He is a degenerate.
It's probably because of us, bro. That's
the markets. No, the markets are going in the way, and it's hard to turn away when there's easy money to be made. You need to lean into it, but at the same time, be cognizant of when you need to take the foot off the gas. But before we sign off, I want to finish that thought with respect to like thinking about the markets. And you'll see a lot of people preaching different things: the wheel strategy, or selling this, or buying that, or jump into SMCI. And really, it's about knowing yourself. It's really about knowing where your boundaries are, because I see so many people, because TJ is a decent sized portfolio that he manages, and he's running a partial wheel strategy where some of the income that he has, kind of generating, you just use to buy more stocks. And so people immediately say like, well, this guy's got some cash under his belt and he's got a great portfolio and it's working for him. But that's not necessarily to say that that's for you. You might be working a 9-to-5 job. You might not be able to manage a portfolio like he does during the day, which he's looking at it every day and continuously going in and out of positions, selling calls. You might not have that opportunity. You might be in meetings from 9 to 5, and you might not be able to get into the markets during those times. And so if that's the case, you might be shit out of luck. And here you are trying to match what TJ is doing when it doesn't fit your lifestyle, it doesn't fit your objectives, it doesn't fit your time horizons or active or passive side of your strategies. And so just know yourself, listen to everything, but understand, and hopefully you gain enough education over time. And this is why I kind of say just invest in an index fund initially and then start to dibble dabble and listen to what Chris said about like certain sectors and everything the like, because you'll learn so much just by getting your feet wet investing, and then you can start to understand the ebbs and flows of certain things. Chris hit it perfect. Energy, it's cyclical. It comes in and out. Same thing with real estate investment trusts. It has its little things and nuances that are important. You don't measure price to earnings for real estate. You measure price.
Yeah, it's based on cash flows.
Yeah, cash flows, right? So there's different things for each individual industry that you kind of need to know the ebbs and flows of, and you can't just dive both feet into the pool. So like energy as well, you can't necessarily invest in price to earnings as well. You need to look at cash flows kind of, because it's a very very capital intensive business. And so when you have a lot of capital intensive business, think railroads, think energy industry, think mining, you get to depreciate some of that as a tax break. So technically, yes, the cash that actually comes into the company is, let's say, 10 billion, but because they've invested so much to develop these resources, the government allows them to write off, say, $3 billion or $4 billion of that. So really, they're only getting taxed on $6 billion. So their net income still might show up as 5, but the cash that actually came into the company is $10 billion that they can use for CapEx or whatever, distribution to shareholders. So you're sitting there scratching your head, like, what do you mean they have a very large payout ratio? It doesn't make any sense. But in reality, it's because they're able to suppress their actual net income due to certain things like that. And it's about understanding those nuances, right? I don't expect you to know it day one, but it's about kind of slowly getting yourself involved and really starting to formulate your own opinions. Listen to everybody. Certain YouTubers might bring something and you don't know what you don't know. So I use my sister as an example. Only wants to do real estate, only. And so I'm like, why are you so obsessed with buying real estate and wanting to do real estate? It's like, well, I don't really know anything else, and I don't really trust the stock market and this, that, and the other. And so I get it. But once again, it's just like, don't be afraid to look at things and understand things, because you don't know what you don't know. She probably doesn't understand that there's a company that, like the S&P 500, that you just like, it matches the top 500 companies. And you get a 2% dividend per year, and you don't have to touch it, and you just let it go. So you don't know what you don't know. Some people just grew up only investing in real estate. Some people only grew up investing in the stock market. Some people don't trust banks at all. So, it just takes an opportunity to think and think about things a little more systematically, where I think a lot of people just shoot from the hip. And sometimes it works, and sometimes it.
So for people that don't know, truffles are like this really, really rare but expensive type of fungus that grows in certain climates, and they're really, really expensive. It's like a delicacy. And the only way to find it is they have dogs that are trained by it, but believe it or not, pigs are really good. So they have something called truffle pigs. So that's what I called him. And I said, he's a truffle pig for opportunity. He just sniffs it out, dude. Oh man,
Yeah.
Interesting. Yeah. Are there anything else that you're looking at that's worth? See, this is the part about Cashflow Chronicles that's gonna suck, because we already have some great companies. We just gotta wait until this shit plays out.
Nubank I like a lot.
Yeah.
Waiting for SMCI to come through.
Yeah, dude. Either we're gonna be celebrating next week, or we're gonna cry together with SMCI.
I mean, I don't know if I'll cry, but I'll just kick myself in the ass. That's for damn sure. But I might cry a little. Nah, it's not enough for me.
No, I think it's gonna be good. The reason why I think it's gonna be good is, number one, they've been really, really upping their Twitter presence by talking about Blackwell a lot, right? So that's number one. If they were gonna, let's say, get delisted or whatever, they wouldn't be bringing all that shit up. That's number one. The auditors they hired in November, and usually you need like a good amount of time before you can really like put it out there. So that's another thing. The other thing is, all of the major like hyperscalers, they're all like expanding their infrastructure spend, right? Which is, once again, leads right back to, hey, who's going to be the beneficiaries? So for me, I think we're in a good spot, man. I think we're in a good spot.
I'm cautiously optimistic. I bought when it dipped. When was it? The 26 or 26, 26, 27. Was that during the Blackwell thing? I'm trying to remember what it was. When did I buy these? Sorry, my contacts are getting really dry, guys. February 3rd. So I guess it's this Monday. So on Monday, when everything was dipping because of Blackwell, or not Blackwell, DeepSeek, was that really only on Monday?
By the way, that whole thing with DeepSeek, it didn't last a week, because
Monday was the tariffs. Sorry, yeah. Sorry, last week was DeepSeek. This Monday was the tariffs. So because of the tariffs, it was down to, I forget what it was, like $25 or $26. So my $35 calls for the end of the month, I was like, I'll put another, $2,000 or whatever into this. It's already up like 80% because it's returned.
Nice.
Yeah, we've had like the last 2 days of push in the stock. So I'm like, do I sell that? Do I keep it? And I looked at it. I was just like, man, I'm like, it's only $4,000. I'm like, what am I going to do with $4,000? I'm like, it could be. And I was like, I'm not going to be that upset if I lose $4,000. You know what I mean?
Mm-hmm.
But I'm going to be really pissed if I sell early and I had the opportunity to turn that $4,000 into like 10 or 12 or 14.
I'm supposed to be saving my money to pay taxes, but I took a portion of it and put it into SMCI. I told my wife I wouldn't do it, but I did it. I don't care. I was too degenerate. I was like, I'll figure it out, like how I'm gonna do it.
That's what we do as men, man. We figure it out. We say we'll figure it out later.
Yeah. So my thing was, if I just take a little bit and put it into SMCI, that means that because I still have a good portion already for the taxes. I just took a portion of it. I took a portion. So this is an opportunity, baby. So I took some of the money. I'm gonna sleep on the couch tonight. So
yeah, 100%.
it's okay.
Is Nvidia still down?
Mm-hmm. I think it's up a little bit. I think it's up a little bit with all the news that CapEx spend was going to go up. I think it was up today. Yeah, it's at 125 already.
Okay, so it is still down compared.
Yeah, can you believe this thing was
1.4?
This thing was 114 last Monday. No, not even last Monday. 2 days ago. 2 days ago.
I'm wondering now. I don't want to look, but I was either going to do the SMCI. On Monday, or I was going to do Nvidia on Monday, and I don't want to know which one's done better.
If SMCI does well, I'm going to sell it and use the profits to reinvest it. I'm going to take the rest, put it back into my tax money account.
Smart.
God, I hate taxes.
Smart.
The taxes, bro. I hate taxes, man.
We get you.
Yeah.
Why don't you just leverage against it? Just pull. See if you can throw. I don't know. Do you have any long-term position stock? Like, do you have like a bunch of S&P 500 somewhere that you can just toss in a bank and see if you can borrow like 30 grand?
Nah, I don't. No, I'm not gonna do that. I'm just. I know what I have. I haven't done my taxes yet, but I know what's gonna come. So I'm over. I think it's gonna. The amount that I think I have to pay, I'm over it by about 30-40%. Like I've saved more than 30-40% on top of it, just in case like I did the math wrong, so I'm fine with it. It's fine.
Yeah.
So, it's like, it's got to be cutting it close. But then again, I also have like the next couple of months of income that I could just save up and, utilize that. So instead of filing in February, I'll file it in the end of March. And I think I might have to wait till the end of March anyway, because of the K1s from Brookfields. I don't know when they come out. I have to find out.
That's a good point. I have to worry about mine. Well, I guess they're in a Roth, so maybe I don't. I don't know. I have to double check. But anyway, anything else, Mr. Patel? No. I would just want to say thank you guys. This has been our best episode yet in terms of attendance. 266 of you at the end of the stream thus far. We got up to 275 at one point. Maybe even more. I'll see when we get off the show, but this is by far our best episode, and not sure what was the purpose or reason for it, but I'm just happy you guys are here. And if you guys liked what you saw, please subscribe. It's completely free. And make sure to follow Chris and myself on X. We love to chit chat and continue to put out new ideas on a regular basis. And we love this sort of stuff.
I'll throw an idea out that I'm looking at that might be worth pursuing. Canadian railroads. Mind blown.
Are we tracing or just long term?
We'll talk about it. Canadian.
There's another one after I want to chat with you about, because it's like literally just somewhere to park money, and I'm like, So if anybody ever asks me and they like want to be a degenerate, and I'm just like, I don't want them to get into something risky, I might just be like, just put it there. But anyway, I'll tell you after. You'll probably agree with me too. All right, everybody, thank you. Let me just play. Do we want to do short outro or long outro?
Nah, just play one of our outros, whichever one.
Greed is good.
The stock is going to go up, down, sideways, or in fucking circles. It's all a fugazi.
Sell it all.
Greed is good.
Huge upside potential, upwards of $60,000.